And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. I've obviously had a couple of technical difficulties this morning. Not going to be able to have my smiling face on there. For some reason, the camera has disconnected. I'm sure many of you are probably going to be considering that a plus. But we're going to do the forecast nonetheless. It's Wednesday, December the 14th. My name is John. Thanks for trusting me with your time as always. Our focus is on accurate context, good risk management, and patience. This morning at 7:30, we had import-export prices out, not wildly impactful, of course. 9:30, the EIA petroleum status report is due out. And then, of course, today we have the FOMC rate announcement at 1 p.m. Central and the Fed chair presser at 1:30 p.m. Central. Yesterday, the API number, which is the 330 crude number that comes out on Tuesdays, the past one was negative 6.4 million barrels. They were expecting negative 3.9 million barrels. It actually came out positive 7.8 million barrels. The EIA last week was minus 5.1 million barrels. They're expecting minus 3.5 million barrels today. And who knows how that's going to come out. The API was a wild miss. We'll have to wait until 9:30 to find out. Stocks are pretty much holding steady as we await and traders, investors avoid putting on new bets before the FOMC announcement. Yesterday's CPI numbers bode for a slowdown in Fed rates, and today we'll get a chance to hear it from the horse's mouth. Crude prices remain firm as China ceases counting COVID cases. Higher demand has entered the market. Now we're going to see if we have some higher supply today with the EIA numbers. VIX was up just slightly last I checked at 22.72. The dollar index 103.8, slightly lower, and the yield on the 10-year back up around 3.51%. As always, if you like what you see or what you hear, please feel free to hit the lucky like button. Share, comment, question, heckling, feedback are always welcome here. Make sure you subscribe to our YouTube channel. Today we've got group coaching at 12:30 Central Time, and then we've got Make Hogue Money at 2 o'clock to 3 o'clock. I'm going to catch the later part of the session today. And that's going to be it for the year for Make Hogue Money and group coaching. We'll get back to business after the first of the year, but I'm going to take a couple of weeks off of those, get caught up on some other things, and be ready for everybody the beginning of next year. The forecast and the recap, however, will remain through next Thursday. I don't think that we're going to have a podcast tomorrow. We've got a meeting, and I won't be available to do the recap tomorrow either. So tomorrow, Thursday, there will be a forecast, and that'll be it for the day. And then, of course, on Friday, there'll be a forecast as well. Then next week, Monday, Tuesday, Wednesday, Thursday forecasts, recaps on Monday, Tuesday, Wednesday. Again, no group coachings or Make Hogue Money next week. Just the forecast and the recaps for everybody. It's good to see everybody. Sorry you can't see me. Again, it might be an improvement. But I'm going to say good morning to everybody. Caprice is first in the room. You win the prize. My brother Rick, a close second. I love you, buddy. The Rooster, crowing already. Charles March. Spencer, good morning. Terry King. Spencer, Uncle Powell better deliver some sweet market moves today. Well, we'll have to see, won't we? Vince, good morning. Shaw, happy hump day. Already, good morning to you. Good morning, JM. Jimmy Decker, Jules. Caesar Alejandro, Glitter Sandwich. Timothy Marks, George Duque. Lacey's kind of wandering around here. Bill Phillips, Serenity Trader, good morning. Grim Reaper Trader, Joel MB. Dan Trader, Jason, Joel MB. What's the difference between Dubai and Abu Dhabi? The people in Dubai don't like the Flintstones, but the people in Abu Dhabi do. Yabba dabba do, right? Neko, do I need to be flat just for the start of the FOMC? Well, we took that rule out. But it's probably a good idea to go into it flat. We saw yesterday some very illiquid markets when the CPI numbers came out, kind of expecting the same thing, although it could be a nothing burger as well. JNR, good morning. Spencer, yes, I do have gremlins this morning. I don't know what happened. It was running fine. Open it up this morning, no camera. No camera. Good morning, Jay Hagel Matters. Fred Decker, yabba dub. Huh. Dr. VJ, good morning. That's nice of you to say, Grim Reaper Trader. I know, Lacey, I would like just check the wire to... No, you didn't just do that, did you, Lacey? You didn't just go down there. Oh, boy. I checked to make sure she didn't, chew up the wire or anything. Sarah Hall, thank you very much. Prayers and love to you as well. ZK, first day on step 2. Just dance with the one you brung, right? No, yesterday, Joe, the email you got was that the regular Make Hogue Money was canceled on Zoom, but the event yesterday was with Anne Marie was on YouTube, so it's up there. You can watch it anytime, Joe. Hopefully, you'll get the chance and your question was answered sufficiently. I'm sure it was by Anne Marie. Yep, gonna dance with the one you brung, right? Scott Saw, good morning, and you conquered. Yep, dance, that's right, Sarah Hall. Yep, you got it. T, Armitage, 90-bit even. Hiya. John Hukel, Rob T, Ricky Norris. I did. I unplugged it and plugged it back in. The computer sensed it. It made its little dink, and it's just not picking up in the studio. But that's all right. Jimmy Decker is asking where Fred Decker is from. He says he's got a great last name. Pretty sure you guys are not related, or maybe related from sometime way in the past. Who knows, right? Dan Trader. Yeah, Lacey's been really good. She has not attacked the tree at all. She just likes to lay under it and probably look at the twinkly lights, and she seems pretty peaceful when she's under it. All right. Well, I don't really know what to say much about these markets today. I mean, we're all waiting for the FOMC. It's going to probably have an effect on just about all these markets. A couple of interesting things in the markets today. Let's look at the mini S&Ps first here. So we had that big jump after CPI yesterday, and this looks like some pretty serious excess on the daily chart. We're still in rollover. We're still adding a whole bunch of open interest due to rollover. When we get close to expiration, we'll probably see a day where we're going to lose about 450,000 in open interest, and that after that day we can go back to depending on a little bit more reliable open interest information. Again, I think the theme for today is to hurry up and wait. We're all expecting something big here at 1 o'clock or 1:30. And I just don't want to try and get into trades or look for secondary or even lower probability trades today just because I've got nothing to do. So we're going to hurry up and we're going to wait. Here's the daily. We have that excess, that test up to weekly kickoff high, the rejection on the profile here. We have, some pretty serious rejection of price up at that level. Here's weekly kickoff high, 41.80. Illiquidity is what pushed it all the way up here. If there was more liquidity in the market, it may have stopped even short of that. But the market left the opening range at the high of the session and rotated lower largely through the first half of the session before finding an area of balance. It's still in that area of balance. We have no overnight inventory. Traders are just sitting here waiting for whatever is going to happen at 1 o'clock. And I'm going to be doing largely the same thing unless something changes. Is there the potential for repair today? I mean, by all intents and purposes, it's a double distribution trend day. We have a little bit of excess here. If we get into that excess, I can see us trading up to this high volume node here, back down to the point of control, which is the low volume node. But again, this is low probability and low profitability opportunities. So I'm going to chill. Here's the TPO chart. Now, yesterday, in group coaching, maybe the day before, we talked about how, and we talked about it during the Anne Marie session yesterday, how the how the initial balance has a high probability of remaining the extreme of the regular trading hour session with a pretty high probability. So yesterday, the initial balance and the opening range were the dead high in the S&Ps. So in the markets we're looking at, and there are 7 of them, so far we have one initial balance that remained an extreme for the session. We opened out of range and out of balance, and the probability of the best trade location coming early in the session with that in that regard rings true here in the S&Ps yesterday. So here's our double distribution. Some may say a triple distribution. Here's the overnight, very narrow range, low volume, low participation, and I think that low participation is going to remain until we get some numbers here at 11 o'clock. Now, this may be different, of course, in crude oil. Backer Sultan. The overnight inventory we're going to see a little bit of it. So when the overnight session started at 5 o'clock last night, it opened right here. Where is the market now? It's right there. So there's no accumulation of longs or shorts coming in. Now we'll get a better explanation of that as we move on through these charts. Here is crude oil, the daily. We've started one time framing in the opposite direction. All right. It's rollover tomorrow, probably, for crude oil. We're not rolling today. Probably tomorrow or Friday, we'll have higher volume in the February contract, which the letter is G. G is the February contract. So already, we just know that we're not going to be able to count on volume and open interest over the next couple of sessions. The weekly kickoff level is going to be pivotal for us today, and we're already kind of leaving it behind. We do know that we have the EIA Petroleum Status Report coming out in just about an hour and a half, 9:30 Central Time. That could bring a knee-jerk reaction to the marketplace. Overall, we lost 10,000 contracts in all of the contracts of crude oil, but we added 16,000 in the February. So there may be an accumulation that we might be able to count on of longs in the February contract because that's a pretty good jump in open interest. Again, some of that is due to rollover. Overall, we lost 10,000. Maybe that just means we added 6, which is pretty decent. The long time frame downside structure still remains intact here. Short time frame, we're one time framing higher. Here's the 30-minute chart. Okay, so overnight inventory, Mr. Backer Sultan. Here's the move yesterday. So if we did increase open interest, it may have brought in new longs. We closed above an important inflection level, 75.30, the weekly kickoff high, and we are holding above it now and looking like we are continuing to move to the upside. All right, last night we opened here. We slid a little bit to the downside, but overall, the move overnight was to the upside. So we can make an assumption when we're trading up here that the overnight inventory is long. Overnight inventory consists of shorter time frame, weaker hands traders. By weaker hands, I mean less funding, if you will. These are not the traders that are going to be taking positions over days and weeks. These are traders that are going to be getting out today. Already, prior to the open here, we saw a move in the opposite direction that may have been enough to even out that overnight inventory. Now we've got the market taking out the overnight high and yesterday's high, continuing to push to the upside. I don't know what everybody's all excited about, but we do have some information coming out at 9:30 Central. Here's the TPO chart. Here's yesterday. We couldn't close the gap. The low of the initial balance remains the low of the session. So there's 2 out of 2 of the markets we look at that held the initial balance at one extreme or another. The range extended past the upper extreme of the initial balance. The market rotated higher throughout the day. How good of a job did it do? It didn't close the gap. It looks like we've left the opening range at the low of the session here. So this may end up being the low of the session overall. We're rejecting value from yesterday early in the session and creating space above. So 2 out of 2 markets, the initial balance was one extreme or the other. NASDAQ. Again, on the daily chart, it appears that we have some pretty serious excess off the highs from yesterday. But again, it's rollover. Look at the volume. All of a sudden, it jumps into the March month. We should be trading March today for sure. We're still largely range bound. We did not get a test of a weekly kickoff high yesterday in the NASDAQ. The market is more range bound, and this would look more like a rejection outside of balance. The market just kind of looked above, came back in balance, and rotated lower. Again, hurry up and wait. There's no reason to be too aggressive in trying to get into any trades today. Early in the session. Maybe after the FOMC you'll see something, but look again. Here's our settlement price. Where are we? Very close to settlement. No overnight inventory. No overnight inventory. So we don't have to worry about early in the session the inventory, the shorter time frame overnight inventory making an adjustment, giving us trade location. We don't even have that. Here's the TPO chart. Upper extreme of the initial balance remains the high of the session. So 3 out of 3 of our markets so far had one extreme of the initial balance, the extreme of the entire regular trading hour day. Similar to the S&Ps, a lot of excess at the high, double distribution, couple of anomalies. Are we going to open in area of potential repair, which would have us going from this point of control here, this TPO point of control here, up to an assumed point of control up here, but the entire range from overnight. And so far, what we're going to see this morning, everything is in range and in value. Patience. Hurry up and wait. Gold. Excuse me, I gotta sneeze. Oh. Okay. Gold took a look above weekly kickoff high yesterday, was unable to settle above it, but we're still seeing hints of continuation to the upside. Higher lows, higher highs, excess above. Open interest was a pretty good, increase of open interest, indicating we do have some new longs that have placed bets in that direction. Look at the volume yesterday. Pretty big volume, and a big majority of that was on the 730 bar. Check this out. Boom. It's a lot of volume for one bar, right? The initial balance remains the lower extreme of the day in gold. So 4 out of 4, one extreme of the initial balance remained the best trade location of the day. It was, of course, very early yesterday because we had the CPI numbers. The market rallied, found an area of kind of comfort, and stayed there, and is still there. We open 1700. We opened at 5 o'clock last night right here. Are we holding possibly some overnight inventory to the short side? It's possible. Is it possible that it's already reconciled? That is also possible as well. So we're opening and did open in range, in value. Stay patient. Again, hurry up and wait. Hurry up and wait. You might be better off getting a good nap in so that you're rested and ready for the FOMC meeting. 4 out of 4 IBs, one extreme. Euro. Continuing upside structure. It's good. It is now also in rollover. Probably going to be switching to the March contract in the currencies tomorrow. So far, the December contract has more volume today, so I would be sticking in the December, probably moving to March tomorrow. If I see it tomorrow, I'll remind you. We added 29,000 in open interest yesterday. Is that rollover related, or is it a combination of the two? Did we place some new bets to the upside here? Volume and open interest was pretty strong yesterday. What about the 30-minute chart? Excess low, the low of the initial balance, the low of the session. So that's 5 out of 7 where the initial balance is one extreme or the other. Overnight inventory got a little long. I would call this reconciled. Nothing is to do with overnight inventory left here for us to think about today. We're right in the middle of range. We're right in the middle of value. We're sitting here at settlement. Are you telling me that there's been absolutely no change in the perception of value of the euro from the close yesterday? Crikeys. How can that be? Well, it tells us, hurry up and wait. Hurry up and wait. How about the 10-year? Anything in there? Range bound. Balance, short time frame control, awaiting the FOMC. We did add 43,000 new longs possibly here in the on the way up yesterday. The volume wasn't all that great, but we did add some open interest. But we also ended up with excess at the highs. On the daily chart, what's it look like on the 30? Hey, rational investors here. Good to see you. P-shape, short covering, possibly. The lower extreme of the initial balance is one extreme of the regular trading hours. Did we bring in all that open interest on this push to the upside, or did we put in some selling in this and create some new shorts in this? What about overnight inventory? Where do we open? We open here. Where are we? We're here. Oh, long overnight inventory as the European markets opened, already reconciled. And the natural gas. So that's 6 out of 7 of our markets where the initial balance is one extreme of the regular trading hours. We're not going to see that in the natural gas. Natural gas is very range bound here. What is going on? Waiting for new information? Here's the 30. Let's look at that first. So, Backer Sultan. This is big overnight inventory. The market opened here at 5 o'clock. Right here. The market has moved significantly away from that level to the short side, to the sell side. So we know that that's more aggressive sellers, shorter time frame, weaker hands traders accumulating shorts. Where did they trade the market to? The lower extreme of the 3-day balance that we're currently in. And then they start to get a little nervous. Here's the TPO chart. Okay. The initial balance was from here to here. It looked above, it looked below, and then became rotational. That has a tendency to happen. So 6 out of 7 of our markets had one extreme of the initial balance as either the high or the low for the session. Yesterday, a lot of directional activity right off the open in these markets. But we're going to see, I think, over time right now, I'm going to keep track of this. And, we get up to a couple hundred occurrences, we'll get some real good information from that as to what percentage of the time the initial balance remains one extreme of the other in the regular trading hour session. All right, beach balls. I wish I was long a couple of those beach balls, rational investor. We don't have those anymore, and you never know. They could be collector's items. All right. All right, let's take our deep breath. Again, my camera is still on the blink. I can't see me. I can see you. As always, I appreciate everybody being here. Looking forward to an interesting and very patient trading day. Remember, there's no reason to rush into anything unless something really changes prior to the FOMC meeting today. Get used to just kind of being in a hurry up and wait mode. You don't want to get cut up before you have the opportunity to participate after the FOMC meeting. I will not be holding any positions into the FOMC meeting. I've done that enough. I don't have to do it anymore. And I will see if there's opportunity for me after. All right? So take your deep breath. Jason, the initial balance to me is the first hour. First hour. The opening range may be something you're thinking about, and I look at it as 1 hour. There's lots of folks that look at the opening range with a little bit longer period of time for that. All right, so take your deep breath, everyone. Stay humble, grateful, and creative, and centered in your trading today. You start to lose your wits. Step away. Don't put yourself at risk that way. Have a great trading day. Remember, group coaching and make money today. Last for the year. Maybe we should have a Christmas party. I don't know. Get out there and do nothing for a little while and then trade well later on. Have a great trading day, and I'll see you for group coaching here at 12:30. Have a great day.